Good afternoon, everyone. Thank you for joining us. I'm Robert Baylor, Director of Communications at NUCA. Welcome to our third NUCA Construction Law webinar. First, before we begin, some webinar housekeeping for attendees. Today's webinar will be recorded. It will be available on NUCA's YouTube channel and on our Construction Law webinar webpage, both of which can be accessed via NUCA.com. All participants are muted upon entry. Phone participants can use *6 to mute and unmute themselves. Questions will be asked at the end of the presentation. To ask a question, you can submit a written question at any time using the chat feature, and I'll read them at the conclusion of our discussion. Now let's get started. Today's construction law webinar will discuss contracts requiring minority, women, and disabled business certification and their usage on federally funded projects. Our presenters will also discuss how general contractors and subcontractors can avoid False Claims Act violations. Tom Molson and Sean Farrell are well known to NUCA members as voices of authority on construction law. Tom is chairman of the NUCA Legal Committee and practices law in Minnesota as a founding partner of Olson Construction Law PC. Sean provides legal counsel to NUCA of New Jersey and is a partner at Cohen Seglius and PC in Philadelphia, Pennsylvania. Thank you all for joining us today on this NUCA webinar Wednesday. Sean, I turn the webinar over to you.
Oh, thank you very much, Bob. I appreciate it. Well, welcome everyone. Tom and I are again very grateful to have you all participate and hear this webinar and hopefully share some information with you about a topic that is very important. This is about loss aversion by following certain statutory requirements that are out there and goals that have to be met when you're working on federally funded jobs. So the first question I have there is what are the risks associated with complying with DBE or MWBE goals and requirements? And that's a thing called the False Claims Act. So the False Claims Act is something that we're all subject to when we're working on federal projects. And we're going to explain what the False Claims Act is and how to comply with it. I can tell you that you guys work in a very regulated industry, but the obligations imposed by the False Claims Act is not very well defined. So to that extent, if you move to the next slide, what I want to do is kind of give us an ability to talk about these issues. So I got to define some terms, right? Once we understand these terms, then we can participate in a better discussion. So the first thing we have to be on the same page is what's a DBE or an MWBE? And that's a disadvantaged business enterprise or a minority or woman-owned business enterprise. And when you're dealing with federal programs, they have participation goals. And it sounds like participation goal, it's just a goal. It's more than that. It's not yet a requirement, but it's something that you have to comply with, and you have to meet these goals in percentages of dollars of the contract and how much of that percentage of your overall general contractor's prime contract must be participated by DBE or MWBEs. Now, I'm going to really talk about DBE programs. That's the federal program. And you can see in the slide that we have up there, the US DOT has developed this program for DBEs. States have all adopted a False Claims Act. Most states have, anyway, adopted a False Claims Act. So that's something to keep in mind. I'm going to focus on the federal programs because there's a lot of business coming out that are federally funded in recent times. And in addition, most states will mirror what the federal program is anyway. But
Sean, could I add one point to that?
Yeah. Oh, absolutely.
Yeah. So to clarify something that Sean says, not only is the issue of DB requirements relevant on federal projects, but as Sean also alluded to, it's federally financed project as well. So as a consequence, you're going to see DBE goals, requirements, and therefore the relevance today, part of the DOT projects being let, insofar as most of them, if not a large percent of them, are federally financed, and as a condition of that, goals are set, annual goals by state DOTs that then they're looking to meet on a project by project basis. Okay.
Yeah. No, that's a great point. So that means, and let's go a little bit deeper, that means that on a state program that's receiving federal funding, you can violate federal law, the False Claims Act, at a federal level, as well as violating state False Claims Act as well. So there's a double whammy there, right? So the DOT set up this program to, what they hope to do is create what they define there as a level playing field to get DBEs or MWBEs into construction and allow them to participate in these federally funded programs. And it has to be a bona fide DBE. And that's a defined term that I'll get to in a second. But in compliance with that, the federal government is saying, I'm giving you this money, either on a federal job or on a state or local job that's funded by federal dollars. So it's attached to money. And once you attach it to the federal's purse strings, then come these obligations. So if we can go to the next slide. So what's a DBE? That's a defined term, and this would apply for MWBEs as well in most states. It's when 51% of the ownership is owned by the individual that is socially or economically disadvantaged. So they have to own 51% of the stock. And in addition to owning that 51% of the stock, they actually have to manage and control the business. And that's a big difference, okay? And there's a lot of attempts over the years to try to circumvent that. I had a client once that came to me and said, hey, I'm going to help fund a new company that's going to be a DBE. And I said, that's great. I said, but you're a white male. How are you going to do that? Or are you just going to fund it and let someone else have 51% ownership in it? And he said, no, I'm going to give 51% away, and I'm going to get my money out from a lease agreement. And I'm going to make that lease agreement an obligation of the company, and they have to pay the lease first. And I'm going to therefore kind of control the funds of that company, while at the same time being able to say to everyone else that this other person owns 51% of the company, which technically will be true. They'll own 51% of the stock, but I'll really control the funds through this leasing agreement of space and for a yard and everything else. And I quickly had to tell them that would violate this idea that the DBE entity is actually controlled by a socially economic disadvantaged person. So any of these types of schemes where the person who is the socially economic disadvantaged person is not the controlling stock owner and in control of the company, where it spends its money, what projects it's going to take, what contracts it's going to sign, who to hire, who to fire. If it's not doing that, it's not really a DBE. And that's going to be a red flag for issues that we're going to have. Okay, go to the next slide, please.
Hey, Sean, could I just add something there?
Yeah.
This, I've been involved with this issue where, for example, it comes up that you're suddenly faced with a DBE competitor, a woman minority-owned business that's just gotten certified as a DBE, and for a practical matter, it appears that, the father or the grandfather that was running the other company has effectively, put the name in the name of the daughter, for example, but is effectively still running it. If and when you find yourself competing with an DBE, which is then going to have a competitive advantage, because on the projects that Sean's talking about, a DBE can submit a higher bid than you, but still, as a practical matter, have the general required to accept it for purposes of meeting the good faith requirements of this whole DBE program. So if and when you find yourself in that situation, it would, with a new competitive DBE firm that your question is really, whether it's independently or owned, there's a lot of regulation on this that someone like Sean or myself can help you to examine to see whether or not, in fact, it should be recognized as a legitimate DBE or in fact is actually a front.
Yeah,
Thanks, Sean.
I concur with that, Tom. If you're ever trying to form one of these companies or involved with one of these companies, it's definitely the opportunity to sit down with someone like Tom or myself or someone else who understands these issues and to talk this out. As a matter of fact, oddly, yesterday I was with a client that was looking to do that, and we'll talk about it in one of my scenarios in this presentation, when a father or family member is trying to help out a disadvantaged person open up a company, what those hurdles look like. But we spent hours trying to craft out a plan to get them to comply with all these requirements, and that's a must if you're dealing with companies in this space or want to start a company in this space. So now that we know those defined terms of DBE, let's talk about what the false claim statute actually is. And I think if we know a little bit about its history, it'll give us an idea of what it's trying to protect. And it dates back to the Civil War, right? So after the Civil War, the North was trying to get back all of its stuff. The war was over. People had muskets, or I guess not muskets, rifles. They had all kinds of, government-owned property, and the government wanted it back. So they created this False Claims Act to say, hey, if you know of somebody who has our stuff or has lied to us and taken from us, let us know. We'll investigate it, and we can impose damages on them, treble damages, by the way, and we can potentially debar them if they're doing business, either take away their state business license or debar them from federal projects or federally funded projects. And there's also criminal aspects to it. The owners of those companies, that anybody on this chain of companies that's complicit with this fraud, can go to jail, and certainly people do. The good news is that most of the issues relating to the False Claims Act do not concern the construction industry. There's usually statistics are out for like 2021, and there's about 200 cases a year that get brought. In 2021, that generated $5.6 billion in revenue for the federal government. So it is a moneymaker. Now, in that, I would say 80% of those cases are healthcare related issues, where Medicaid, Medicare issues of not appropriately billing back to the government rebates result in False Claims Act violations. About 16, they don't track it for the construction industry, but about 16% of that $5.6 billion is potentially construction and some other unrelated, unidentified industries. So that's $896 million of revenue in 2021 that was potentially born out of issues related to construction industry. So it is definitely a hot issue, and as these requirements go up and these goals go up for participation, it's more and more important to understand this, right? As I said before, most states have adopted their own version of the False Claims Act, and so even if you're just doing state and municipal work or local work, it does not mean, in addition to be federally funded, it does not mean that these False Claims Act issues don't concern you. So if we go to the next slide, I want to try to.
Sean,
Yep.
can I just jump in one thing before you move?
Yeah.
So one important takeaway of this is, from what Sean is saying, is this: when you're doing public construction work, whether it be the federal version of this law, False Claims Act, and or the state version, you could be debarred or otherwise fined by way of submitting false information. And how I've seen it come up, and really, I think where you need to focus as one of the primary areas, is if you're into a claim situation, you need to honestly, reasonably calculate your extra costs and be mindful of not being one of those contractors that you've heard before say, hey, look, I'm going to ask for 100 or 50% of what I'm due, because then if we get into settlement, if I only get a half or third of that, I'm still good to go. That kind of approach is going to put you at risk at violating the False Claims Act if you're, intentionally, if not recklessly, failing to properly price extra costs on claim situation, state or federal. Thanks, Sean.
Yeah. By the way, there is a 6-year statute of limitations on the False Claims Act if they don't say it's one continuous act. So sometimes they try to go back even beyond 6 years. And the damages, they can get trebled. So 3 times what the damages are measured in different ways. Most contractors who find themselves in this circumstance, you'll find yourself with the DOJ looking to say whatever revenue you generated from those projects where you participated in a False Claims Act violation, that revenue is the damage times 3. There's a recent Third Circuit case, which helps a lot, that came out that says it should not be the revenue, it should just be the profit, because it's really that is really the cream, and that's what it should be. So it would be the profit generated from those projects times 3. But still, over a 6-year period of time, you could see where if these damages can get rather large, even if you're lucky enough to keep away from the criminal aspect of it, because that threat of criminal aspect puts a whole new pressure on you for negotiating, let me tell you. So with that said, let me give you sort of a scenario that we can walk through and talk about this. So scenario 1 is good person, subcontractor or supplier negotiates the material terms of its contract with the general contractor, coming to agreement on scope, price, and time of performance. After these negotiations, the general contractor asks that all or part of the subcontract or purchase order for a supplier be provided to a third party to satisfy DBE or MWBE goals. Is good person, subcontractor, or supplier at risk for violating the FCA? So this is not the general contractor. This is are you as a subcontractor or supplier in potential violation of this scenario? And trust me, this happens all the time, and clients tell me all the time that this happens in competitive bidding situations all the time. Go to the next slide, please. Of course, the answer is yes, there is a potential for an FCA violation in that scenario, because that third-party subcontractor must still perform what's called, and this is sort of a term of art, a commercially useful function, or CUF, on the project. Next slide. So what's a CUF? That's the question. And it's important that we understand this, because now, again, as the good subcontractor or supplier, you've done nothing wrong. You've spent your time working with the general contractor on these issues, but the commercially useful function they'll look at to see whether or not that new party to this deal is actually going to perform the work. Okay, if they're just taking your invoice and marking it up and sending it to the general, thus they're sitting in the middle, you've got a problem. That's the situation where now, if you start participating in that, you're going to be potentially exposed to violating the FCA. For suppliers who might be out there, you've got to know that the person who's buying your product negotiated the price, determined the quality and quantity of the order, is either themselves ordering that material or ordering and installing, and they're going to pay for the material. It's not just a complete pass-through. I'm not really paying for it. When the general contractor gets the money, he'll pay you. If any one of those elements are missing from a supplier, then you've got a potential FCA issue. So that is a scenario where you've really got to be, if you can go to the next slide, you've really got to be careful about a, subcontractor or supplier getting wrapped up into the FCA through the general contractor's participation. Conversely, if you change the scenario a little bit, if that's happening below the chain and the general contractor is aware of it, the general contractor is at an issue. Recently, I'll show you where this sometimes plays out. I had a steel fabricator who had an issue where he had spent considerable time and money negotiating out a project for a bridge project where he was providing railing. And at the end of it, it was just that the general contractor said, give half that contract to somebody else. And he said, no, he's not going to do that. And so he failed to supply any of the actual railing. He did get paid for the engineering that it took for him to figure out the price, but then he walked away from the agreement. And so maybe about 6 or 7 months later, he entered into another contract with that same potentially false MWBE, but this time that contractor was working on the second project and was performing the work on the second project. So it's a project. The point of this story is it's a project by project situation. And at the end of that second project, my supplier was still owed about $50,000 for the material that it supplied, the railing. And it said, I'm not going to pay you that because you cost me at least $50,000 by not selling to me, where I had no commercially useful function on the first project, but you didn't sell it to me, and therefore that cost me money. And I immediately called up his attorney, explained, and said, if you want to have that kind of set off, then we're going to have a qui tam action, and we're going to have to talk about whether or not your client paid or violated the FCA. The very next day, check for $50,000 was on my client's desk, and we kind of put that issue aside because my client stayed away from the project that had a potential false claims issue, and on the project where even the same contractor, same DBE, was participating in negotiating all the prices and time for delivery, then he was allowed to enter into that contract and got his money. So you can see where knowing these issues can not only keep you out of trouble, but maybe even get you paid. And one of the things to think about is how these things get brought to light to the federal government to prosecute. And it's usually 3 different sources. The first source is that a competitor notices that a DBE or MWBE is all of a sudden getting a lot of work, and they know through talk in the industry that they're really not a contractor performing the work and don't have a commercially useful function. So they can call the DOJ and start an investigation. Now, why would they do that? They would do that because once they do that, if the government takes up the investigation, the person that calls and notifies the Department of Justice about that becomes what we call a realtor. And a realtor is entitled to 18%, up to 18% of the final fine that's imposed upon the false MWBE or DBE. So imagine that. So the government has given an economic incentive for people to call them and tell them when they think that someone is not a proper DBE. So you get it from, again, competitors. You can get it from upset or disgruntled former employees, might even turn the company in itself. These are all situations where you get a potential for investigators in the Department of Justice to start looking at a company and determining whether or not on any one given project or multiple projects there were FCA violations. Anything to add, Tom?
No.
Oh, good. Then
No, actually, no, I would add this. The use of this whole DB program is so widespread, but both on the federal and the state level, that to the extent that any of you want more information about it for whatever reason, becoming a DBE, challenging a DB certification, if you're bidding as a general, wondering whether to what extent I have to utilize the higher bid of the DBE in order to make sure that I meet the project goal or otherwise satisfy the good faith requirements. The good news is every state has its own DBE program guide. It helps to provide, as by definition, guidance on how the program is working in your state, what the requirements are, how you can run afoul of it. So tap that as a resource if and to the extent that you're doing projects, either federal projects or federally funded, which again is often in the form of DOT projects if you want to learn more about it.
Yeah. So if we can go to the next slide. So I wanted to address another scenario with you guys that I see a lot, and that's when a family member, let's say it's a wife or daughter of a owner of a construction company who's not a DBE, so they're a non-DBE contractor, but their wife or daughter says, you know what, there's a lot of ability to participate in these goals and get work, so I want to do it. Can a family member set up a DBE company, even though they are associated to this other company? Next slide. The answer to that is yes, you can. There's nothing that prohibits a family member who's in a company, who's learning how to run a concrete business or how to run a carpenter business or electrical business from going out and forming their own company. Nothing at all. But the obligation, according to the statute, and I've given you the statute right there, is that you cannot be controlled by the non-DBE. You, as the DBE, must make judgments on what projects to take, what prices to give, suppliers that you're going to use. You have to be controlling that. If you're controlled by a disadvantaged owner or relative, then you're going to be violating the False Claims Act. So it's actually not even illegal or anything wrong with saying that in that scenario where, let's say, a daughter goes out and becomes a contractor, for the father to even be on the management team of the new company. But again, if the father is controlling the new DBE such that all decisions really flow through that person, the non-DBE, then you've got problems. Next slide. So what will get looked at is the independence and the control. And the way to think about this is the company, the DBE, must be viable no matter what relationship with any other person or any other firm. If that company can't stand alone, then you've got problems, right? And then again, it's about, outside of that, it's about control. So for viability, if the only work that the DBE gets is acting as a subcontractor to the parent company, to the father's company in my scenario, that's an issue. You can't be a legitimate DBE because your viability is not going out bidding and finding work and doing good work. It's just about that family relationship, and you're being controlled by a non-DBE entity. And thus that bleeds into, if you're not really independent, if you can't go and get work without the association to the non-DBE, you're probably being driven and controlled by the DBE for managerial issues. So that the owner of the DBE has to be able to stand alone. And that person also has to know that and be technically competent in whatever that subcontracting or contractor company does. You can't start an electrical company and know nothing about electricity. You can't just say, well, I'm not even licensed, but my father is, and I'm going to sub him out back to me. That doesn't work. Next slide. You've got to...
If I can add one other thing, Sean. I've seen this issue of what Sean's talking about, where, again, somebody that you've been competing with, it's a non-DBE, on the basis of getting work and giving the low price to then becoming certified, having the advantage of being able to submit a higher bid and still be required to have the general accept that in order to meet the project goal. There are on a state-by-state basis, there are procedures in place that if you believe a DB firm has been, improperly formed, which is to say that it was still, as a practical matter, acting as a front, each state's DB program set forth procedures that you can follow to challenge that. Again, any legitimate DBE firm, it's a program that gives them an opportunity as a small business to grow, but to the extent that it doesn't appear legitimate to you as a competitor, again, the procedures set forth in each state DBE program that talk about how you can challenge that.
Right. So let's just quickly walk through some of the factors that will be considered as to whether or not this new DBE is legitimate and can go out and bid work, or whether or not it's subjecting itself to a violation of the act. And that would be, what's the relationship to the non-DBE? Do you have the same personnel and they just put on one hat to another hat? I've had clients that have had family membership or family relationships with subcontractors where the employees of both companies have both email addresses. And when you call them, they're like, well, which company you want to talk to? And how am I responding? Am I responding as company X or am I responding as company Y? That's a factor. None of these are, by the way, you can't just have an equation and say if you have 1, 2, and 3, you are a legitimate DBE, and if you don't, you're not. It's a weighing. It's on like the balancing of a scale, right? Of justice, right? So you're just balancing scales. But that's one thing that they're going to look at. Personnel. Does the non-DBE and the DBE share personnel? Do they share facilities, equipment? For financial or bonding reasons, are they sending in consolidated financial statements to help each other out to get bonding capacity or loans or any of those financial issues? Those are all factors that we're going to have to look at to determine whether or not there's enough separation that these companies can act alone. Again, there's nothing wrong per se, and it's not a very heavily regulated understanding of the statute. You can't say you can share 1 employee but not 10 employees. But there is no prohibition from sharing employees, by the way. You would have to pay for those employees, right? So there have to be some sort of accounting reconciliation. If someone was an estimator for one company, let's say 3 days a week, and an estimator for another company 3 days a week, there's nothing prohibitive of that. But because of that family relationship, you're really going to have to show separation on some of these other elements, right? One thing to consider are past or present employer or employee relationships, meaning that if you own a company, but you do, let's say you are the DBE, you're the daughter in my scenario, and you have your own company, but you're also the accountant for the parent company. Well, that employee relationship into the other company that you're going to be working with is a factor in considering whether or not there's independence between these two firms. One thing to think about is, am I creating a scenario that's completely different, a completely outlier from every other company that I see in the world? Because if no other truly independent companies, a company that has no relationship with each other, is willing to enter into a business arrangement outside of that family structure, that's the red light. That's where you've got to say, hey, maybe we've got to separate a little bit more, or is this an issue of a company that I don't want to deal with? So in considering these factors of independence, you've got to consider the relationship in its totality and how these two companies interact. Next slide. I get a lot of people saying, you know what? I went through an application process. I'm DOT certified, and therefore I've already been accepted, and or I'm working with a company that's DOT certified, so I can just rely upon that. The answer to that is no. While you, as a DBE, got certified, the government doesn't accept their own certification that you've done everything properly. Meaning that if you lied in the certification, if you weren't clear enough about your relationship with these other companies, such that the government provided you with a certification that it should not have, then you're responsible for the actions of entering into other contracts afterwards. And it's that implied certification of, I'm telling either as a subcontractor to a general contractor that I am certified when I'm not, and then that general contractor relies upon that and gets paid from the federal government. That's the issue, because now money is passing based upon the certification that all the other contractual provisions have been complied with, that all the other governmental provisions have been complied with, that you are a proper DBE or MBE, and conversely, that you're working with a proper DBE or MBE. So just having that certification does nothing really. You need the certification to provide and get credit for the DBE, MBE participation, but it's not a defense. It's not a shield to any of these allegations. Next slide. The burden.
Sean, can I add something here, please?
Yeah.
If certainly there's benefits for someone being a women minority-owned business. I see it with a lot of contractor clients who want to get their wife or their daughter involved, and I encourage you that if you have that interest, again, talk to someone like Sean or myself to really get be given some guidance on a good transitional roadmap. That certainly I've encouraged clients that want to go that route to have the examples that I give, a wife or a daughter, the actual experience in getting more involved in the company and really developing the very real aspect of being in control and running the company. And so, I think that's an important transition that you need to account for and allow, in my opinion, a period of years to really get someone meaningfully ready to assume what Sean is saying in terms of meaningful management and direction of the firm. So, yeah.
Yeah, I think it's a great point, Tom. And I was alluding to earlier that I sat down the other day with a client to do just that, to map out a plan. It was a 5-year plan, to Tom's point. Sometimes it takes that transition. You just can't start tomorrow and say, I'm a DBE. By the way, you can start and say, I'm a woman-owned business or I'm a DBE business, but you're not, as long as you're not getting the jobs because of your certification. So there can be a transition and a graduated method of compliance with the FCA before you start to participate in the programs that are set aside for those entities and those goals. So that's the long-term plan, and you need to map that out. You need to be diligent about it, and you need to know where the risks are, plus and minus, to make sure that you don't violate that once the company's up and running and taking advantage of these programs. Because the burden of proof is always going to be on that DBE to prove not only that they have the certification, but they were eligible for it in the beginning. Now looking backwards at it as to what your participation and dominance was and management of that company was after the fact. So next slide, please. Some of the factors, just to kind of highlight what we talked about on this program, some of the factors that they're definitely going to look at. These would be 7 items that if you're thinking about becoming or opening up a DBE or MWBE, or you're participating with one, these are some of the factors to think about, which are, again, the combined financial statements, equipment ownership, right? So you're going to start a business, but are all my trucks coming from a company that's already in existence, that's a non-DBE? Am I going to put on metallic, like magnetic decals over that to show my company when the trucks are for me, and not when the trucks are being used by the non-DBE? These are some red flags that are going to cause, if you get under the microscope of the DOJ, an investigation. Combined office space, shared employees, shared emails, signatures on bank accounts. That's something. So if you're a completely independent company, but you have an owner of a non-DBE that you do a lot of work with, who's also a signatory for your bank, that could be an issue. Now, there are real world, reasons for why you might do that. Maybe it is your father and you trust that person, and at times you're away on vacation or you're somewhere else, but you want to make sure payroll's getting out. You have to have somebody else that is able to sign those checks. But if it's going to be your father, in my scenario, who owns a non-DBE that you're working tightly with as a subcontractor, I'd recommend that you don't have that person on the signature for bank accounts. Let's find somebody else, because those are going to be, again, there's no mathematical equation that says if you have 3 of the 7, you are a legitimate DBE, and if you only have 1, you're not. It's just a weighing, okay? And of course, shared use of employees or estimators, that's another thing that frequently comes up as a determining factor. Next slide, please. So that brings us to the conclusion of the presentation that Tom and I wanted to present to you guys on some of the issues that you're faced with FCA, False Claims Act issues. These are going to be more and more relevant as participation goals increase. Again, the DOT is a 10% participation goal, but states often have much more. In New York, it's up to 30% for state contracts. So as these things happen, I think you're going to find yourself in one of these 2 scenarios, that we've laid out here today. And when you do, you really have to understand these risks. These are good issue points for you guys to think about, but you really got to understand these risks to map out a plan to stay away from any type of investigation that draws you into those unfortunate circumstances. So, Tom, anything to add in conclusion?
No, I got one point. Again, really, really good job, Sean. It's an important area. And again, if you're doing federal or DOT work, this is, as well as even beyond that, all of this is relevant for you, and it's important for you to learn it. I also wanted to add one other point, which is if in fact you're interested in exploring getting a DBE firm certified, you should also not only be having, as Sean was talking about, a program in place for years to transition into actually understanding the company operations in order to be able to help lead them. I also encourage you to look at, as part of that plan, the financial side too, because it's important that you establish that your have some level of financial independence from, for example, if your father's wanting to get you started, or your husband wanting to get you started. So you want to show that financial independence as well as a knowledge of being able to run the company, and both of those should be part of a multi-year plan to be able to transition from not being a DB to hopefully becoming certified.
Thank you, Tom, and thank you, Sean. Let's now open the webinar to questions. You can use the chat feature to submit a question, and I'll read the question to the presenter. Or if you prefer, unmute yourself, state your name and company, and ask the question directly. Remember to remute yourself after you finish. Are there any questions at all? Sean, I think you might have been extremely comprehensive once again.
Let's hope. Well, listen, if anyone has any questions afterwards, feel free to reach out to Tom or I, and we can definitely, provide you with a more in-depth analysis and answers to your questions. Because I do realize that, this touches upon some sensitive issues that you might want to talk about in private, confidentially, as opposed to in an open NUCA forum. So that makes sense to me on this subject matter. But they're very relevant. They're very important to avoid risk, but to also be able to explore these avenues of potential growth of a business and to participate in these programs. So if there are future questions, don't hesitate to reach out to Tom or I.
Sean, we have a question.
Oh.
If you work for an electric cooperative and you receive FEMA money, is that covered?
I don't know how you're defining electrical cooperative. And FEMA money would probably subject you to the False Claims Act. I think so you're going in on an emergency basis to figure out or to help with a natural disaster. Those would be federal funds. I would think that you're covered under the FCA in those circumstances. Yeah, that's right.
He replied like a storm break.
Yeah.
Okay.
Yeah. I would think you would have FCA issues on that. Tom, have you ever dealt with FEMA in particular?
I have, and I agree with you.
Okay.
It's federal money.
That's really the hot trigger there, right? Is the federal money, because once again, the federal government starts giving money, then all of their obligations, all of their statutes are going to apply.
Tom and Sean, thank you very much for your time today to lead this important discussion. We'd also like to thank our many national partners for generously supporting NUCA and our monthly webinar series. Today's webinar has been recorded. A recording of this webinar will be made available on the NUCA.com website and our YouTube channel over the next few days. And thank you for your time today to join us for this special industry webinar and for supporting NUCA. The next construction law webinar will be held online September 19th. Thank you for the time this afternoon, and please enjoy the rest of your week.